A very good morning, good afternoon, and good evening to all. Myself, Vaibhav. I welcome all of you to today's session of Visual JForex, in which we will be continuing our algorithm development work using the Parabolic SAR extended indicator. We will see how we can utilize this indicator to devise a formation in which we can optimize the entry to trade with the trend and look for profitable trading opportunities both on the buy side as well as on the sell side. In the last session, I had explained to you how we can get the instrument subscription done where the Euro USD is being used as the instrument of choice. Afterward, the position amount was defined at zero. These two SAR extended blocks were added with the candle period being hourly and the lookback period of 1 and 2 respectively. We are not tinkering with other parameters, we are going with a default setup. To look at the price volatility, we are also taking the help of this info candle of get historical candle. Now, I will give you a brief refresher of what the logic is. For this session, we will be more concerned with the buy side of the equation. We will look to get the execution done so that the buy trades can be executed in a profitable manner. So the formation is quite simple, both to understand and equally easy to implement on the Visual JForex. So for any buy trade to happen, we want the last hourly candle close to have happened above the prior hour's SAR output value, and only if that has happened, we will look for other conditions. And if you remember, I had told you that the closing and the opening difference needs to be above 15 pips at the minimum and below 30 pips for the Euro USD. It will vary if the instrument changes, and these values you can say more or less are arbitrary. There is no perfect formation here. In this case or any other case, you have to take the values as per your preference. Whatever suits your purpose is best for the setup, and the opening value of the last hourly candle needs to be above the last hour's SAR extended output value. So this condition needs to be satisfied, and we then go for a market open. Whatever is the current market price, we will go for the trade then and there while keeping the stop loss and take profit in proportion of the actual difference between the opening and the closing value of the last hour. So that's the requirement here, and we are relying on the SAR output, SAR extended output to get us most of the trades with a higher probability of ending the trade on a profitable note. And here also, as was the case with the SAR, we might encounter situations where the underlying instrument remains sideways and some of the trades might not go anywhere. And to that extent, we do have taken some caution while defining the entry points, and also this is a refinement compared to the SAR. So we will count on both these changes in our approach to help us avoid the sideways kind of scenario and plan for the trades where we can expect the trend to last for quite a while. So that's what the logic is for this formation. Okay, so now it's time to turn to the execution. First thing first, we will have to get the pip values defined. We have to define two variables, one with the 15 pips and one another with 30 pips, not 13. So I'm going to get two calculation expression here. We join it to this last get historical candle block, and here we have this. All right. Now to define 15 pips, we have to consider the default variables, default instrument pip size. So this is the pip size. Then we multiply it with a new variable with the start value of 15. Minimum pip condition, MPC. This will be A1 into A2 All right. This variable will have the value of 15 pips. Then again we take the pip size, and this time around we have to multiply it with 30. So the start value will be assigned of 30. I will take as MPC1. This is maximum pip condition actually. Again the same calculation, A1 into A2, and we name it MPD1. All right. Now we have to consider the actual difference, and since for this session the focus is on the buy side, so we will consider the closing and opening price difference, and as we need the difference to be at least more than 15 pips, so we will have to deduct the opening price from the closing price. So one more calculation expression block is needed. Now coming to the actual difference, for that we have to consider the auto created variable. This is the candle 16, which is the last hourly candle. So I have to take its closing value and deduct open price. So this will be A1 minus A2 actual candle difference on the buy side. All right. Now I will add multiple action. So that's going to be a logical component, and afterwards we have to take a couple of if blocks. Even I'm not sure how many of these are going to be needed. So we just start anyway, and we will add this as we go ahead. Now coming to comparison of the closing price with the SAR extended output value. We need the candle 16 candle close to be above the SAR extended 15. SAR extended 15 is the second last hourly output of the parabolic SAR extended, and we compare it with candle 16 candle close, which is the last hourly candle close value. It needs to be higher, so first input greater than second input. Then again we compare candle 16's open price with last hour's parabolic SAR extended output, which is SAR X11. This one too needs to be higher, so first input again greater than second input. Then we compare the closing and the opening price difference of the last hourly candle. So we need candle 16 candle close to be greater than open. So here it should be first input greater than second input. All right. Now coming to the actual difference. The actual difference needs to be within the defined parameters above 15 pips and less than 30 pips. So we are going to need to compare with the defined variables MPD1, which has a value of 15 pips, and MPD has a value of 15 pips, whereas MPD1 it has been assigned the value of 30 pips. So we have to define these as first input less than second input. In this case, first input. Now I think I have to reverse the relations. It should be first input greater than second input and first input less than second input. Alright, now I'm quite sure we are on the right track. So with these conditions defined, all we have to do is place the order as and when price starts price above the last hourly candle close. So again we are going to need candle 16 candle close, as the common input, and compare it with closing value of candle 17 and candle 18, which are 10-second candles with the look back period of 1 and 2 respectively. So we need candle 17 candle close to be greater. So first input greater than second input. Okay, that has been already connected. So I will not connect it there. We compare this to candle 18 candle close, and it should have closed on the lower side. So first input less than second input. That means the penultimate 10-second candle was on the lower side, and then in the last 10 seconds the prices have risen above the last hour's closing value, and then the trade command will be placed. So now I have to bring in the trade command block, which is going to be a market order, open at market. All right. So first input greater than second input. All right. Now we have to define the parameters for this trade command block, and for that we will go with a default setup. We are not going to tinker much with the parameters to keep things simple to understand and simple to execute. That's what the series is all about. Default instrument remains as it is. Trade amount I will change to 0.1 million. Slippage will be changed to 2 pips. Stop loss since we are going with the condition that the last hour's opening and closing difference should be within the range of 15 to 30 pips, I think adopting a stop loss of 20 pips should be good enough idea, and we will go with a risk reward ratio of 2 is to 3. So I will make the stop loss of 30 pips. All right. So here we have defined this required mandatory parameter for the trade command. And with this, as I see, the buy side of the algorithm is now complete. So that's it from my side for today's session. And I think I have forgotten to join the trade iteration flow to this multiple action, which now I have done. So we stop here for the day, and in the subsequent session, we will be dealing with the sell side of this algorithm, how we can set the conditions for the execution so that the trades can be optimized in an environment where the bearish momentum is prevailing. Thank you all for joining in. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. So all these links, useful links have been provided in the bio. And also, if possible, don't forget to post reviews on the Trustpilot platform. See you next time around. Thank you all for joining in. Goodbye.